Today I'm going to show you a weekly range on the Canadian dollar Swiss franc Forex pair that could break this week. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Today's video will be a bit short. We've only got a few charts to look at, and I'm trying to wrap another video project so I can get started on the Professional Trader Series. And speaking of the Professional Trader Series, don't forget to comment below on what topics you'd like to see us cover. Remember, this will be a free course available right here at the Trading Strategy Guides YouTube channel on Wednesdays. As I mentioned, today's trade pick is a weekly range on the Forex pair Canadian dollar Swiss franc. We'll look at that shortly, but first I'll update you on a couple of open trades and then today's trading maxim. Happy Monday! Remember to click the subscribe button and hit that bell so you won't miss any of my great trading training. Let's go through the open trades. The Aussie Canadian is still hanging down here, and we're still waiting for the parabolic SAR to drop down below break even here so we can start trailing the stop. As I mentioned Friday, the US dollar, Japanese yen looked like we were going to get a sell trigger right here, which we did. And we did it on huge volume. And of course, earlier today, it almost pushed down to our target. And it pulled back a little bit. So now we're waiting for it to hit the target at 107.28. Stop loss currently at 109.23. Let's take a look at today's setup on the Canadian dollar Swiss franc Forex pair. The Canadian Swissy has a big weekly range going on here, and just last week confirmed the support level right down here. A range consists of a strong resistance level like this at 76.25 with several touches of the level, and a strong support level like this at 71.75 with several touches of that level as well. As always, I like to see declining volume and volatility during the course of these patterns, and it looks like price is pushing down below the range right now, but we'll have to wait till Friday's close to confirm this trigger. And here's the trade plan. We're going to buy a weekly candle close above the range, or above 76.25, or we will sell a weekly candle close below the range, or below 71.75. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, we'll take a half-size position to reduce risk. You can calculate that percentage by taking this volume, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, stand aside on the trade. Stop loss will be 1.5 times the daily ATR, and the first target will be 1 times the daily ATR. So let's say that this breaks down here on Friday and closes here, and just ahead of Friday's close, we take a sell position right here. On that day, switch to the daily chart and look at the ATR, multiply it by 1.5, measure that distance above the entry for your stop loss, measure 1 ATR below the entry for your first target. And of course it'll be just the opposite if it breaks to the upside, although that's looking more and more unlikely, but you never know. It's 4 more days of trading on this one. If after entering the trade we get a close back inside the range, we'll take our loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of this pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup on the Canadian dollar Swiss franc Forex pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims as well, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start using your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 48. Success is not final. Failure is not fatal. It is the courage to continue that counts. And that, of course, from the great Winston Churchill. Trading is an activity that requires you to be okay with losing. That's sort of counter to what most of us in Western culture have been taught. Most of us have been taught that we must win at all costs. What trading requires is that we shift our definition of success. In trading, winning is not automatically good and losing is not automatically bad. The definition of success in trading is being profitable. Being profitable may involve cutting our losses. That means that we will have to lose to be successful. Keep that in mind as your trades progress. Remember our weekly Canadian dollar Swiss franc trade plan here. We're going to buy a weekly candle close above the range or above 76.25, or sell a weekly candle close below the range or below 71.75. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to make sure you don't miss any of these great picks. I'll send out about 2 or 3 picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't forget to let me know in the comments what topics you would like to see us cover in our Professional Trader series. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I'll see you next time.